How would you invest your first $10,000? Let's say someone handed you $10,000 cash, or you hit the winning numbers on a scratch-off ticket. Perhaps you got a big bonus or commission at work for hitting your sales quota. Maybe you were able to save up the $10,000, but realized that it needs to be moved out of a savings account and put somewhere else, in order to grow at a reasonable rate so the compounding effect can start sooner rather than later. After all, you know that leaving it in the bank can lose you more than it earns due to inflation. Investing $10,000 in one of the following ideas can generate some noticeable returns. It can be pretty exciting for people who are just getting started on creating wealth for their future. If you enjoy videos about money, personal finance, and investing, all topics that will help you better your financial future, consider subscribing to the channel to see more videos. If the video is helpful, make sure to hit the like button. Invest in retirement accounts. Usually the best way to invest your first $10,000 is to invest in index funds or even mutual funds through a retirement account. If you have a 401k match offered by your employer, it probably makes sense to contribute as much as required to take advantage of the entire match. For example, if they will match up to $3,000, invest enough so your employer is contributing all $3,000. An employer match is like free money being offered, and it makes sense to use the opportunity. The money that the employer matches is like a guaranteed return on investment, so why not enjoy that? After taking advantage of the entire 401k match, put any remaining money into a traditional or Roth IRA. Why wouldn't all of the money just be directed into a 401k? Why contribute to another type of account? Well, the investment choices offered in a 401k are usually very limited and often more expensive than funds offered through other retirement accounts, and they might not align with everyone's investing strategy. The most common choices within a 401k are mutual funds, which typically charge higher fees, so it makes sense to put the extra money into an account where there are endless investment choices available at very low costs, such as index funds or exchange-traded funds. Invest in individual stocks. Individual stocks are another good option for investing that $10,000. These are desirable to investors who are willing to put in some extra effort in order to pick a company with solid fundamentals and future growth prospects to ensure a healthy return. Buying single stocks can be fantastic in that they often offer massive opportunities. However, novice investors often end up failing to beat or even match the market returns. Due diligence must be exercised when choosing a proper buying opportunity, and the investment must be continually reassessed to ensure it's a profitable one. Investing in individual stocks is best done with money left over after funding retirement accounts, as it's often treated more like fund money than retirement savings. If you invested all of the $10,000 sum in a single stock and made a 30% return in 1 year, that's $3,000, a pretty sizable amount. Do that annually, and at that rate of return, it would only take about 2.5 years to double your money. For comparison, investing in the overall stock market will double your money every 7 years on average. If you choose a company that pays a 3% dividend yield on an annual basis, your $10,000 will be generating $300 in just dividend income every year. Invest in real estate. $10,000 could be enough money to get started in income-producing real estate, and it could allow you to begin taking advantage of leverage, or using other people's money. If renting out property, being on call 24/7, and fixing broken toilets for tenants doesn't sound like fun, a primary residence can be a solid investment choice instead. Since most lenders require 20% down on investment properties, buying a first home is a fantastic opportunity, because lenders might only require 3% down on a personal residence. This makes getting started in real estate much easier for beginners, as property is an extremely high barrier to entry investment. For example, you could purchase a $250,000 home and only put $7,500 down, using the bank's money for nearly the entire purchase. Extra rooms could be rented out to some friends if so desired, or the property could be rented out a couple years down the road. You could also continue living there and enjoy the property's appreciation of value, provided the home is located in a high-quality location with increasing population, new growth, and revitalization efforts in place. Invest in a REIT. If owning real, tangible property that must be maintained and managed doesn't sound appealing, another option for investing in real estate is to buy REITs, or real estate investment trusts. These investments are traded the same as individual stocks and can be purchased within most retirement accounts or brokerage accounts, such as Robinhood. REITs are companies that own and usually operate income-producing real estate, or they provide financing for real estate. Due to the business structure, the IRS requires them to distribute most of their income in the form of dividends to shareholders. With REITs historically outperforming the overall stock market, they can be a great alternative to purchasing physical property. There won't be any non-paying tenants that you need to deal with, large down payments, and other headaches caused by owning real property, albeit without some of the tax advantages and leverage opportunities. Start a business. Investing in a business is a fantastic option for those who would be interested in being their own boss. Many wealthy people have created their wealth by starting a profitable company and scaling the business. Successful entrepreneurs like Mark Cuban have created profitable endeavors that have compounded over and over. There are opportunities in almost every category that can be harnessed and turned into something that will turn a profit, such as window washing, pool cleaning, social media marketing, or online courses. The possibilities are endless when it comes to starting a business, provided you have the time needed to begin. Start a side hustle. If your main job requires too much time and effort, there are unlimited opportunities in the form of a side hustle that can be done on nights, weekends, or whenever you find yourself with some extra time. Most people don't have the ability to quit working their main job and start a business, but almost everyone has a little bit of extra time that can be used to create another income stream. Side hustles are similar to full-time businesses, but they usually start out as a small, part-time income by filling up spare time. Instead of starting a window washing company and going full-time, you might choose to wash the windows of 1 or 2 homes every night after work, or a few on Saturday and Sunday. However, they have the same limitless opportunities as a full-time business, meaning that they can be grown to large levels, possibly bringing in more income than a regular 9-to-5. A side business can be a great place to grow that $10,000. Invest as a silent partner. Another great way to put your money to work is to invest in a business with a partner, perhaps silently. This means the money would be invested within the business in return for an equity stake, and that's all that's required. Someone else would be managing the task and earning money. For example, if your friend is looking to start a carpet cleaning company, but they don't have enough money to buy all of the carpet cleaning machinery, advertise, take out an insurance policy, and stock up on chemicals, they might turn to an investor who would enjoy sitting on the sidelines, allowing their money to work for them, while owning part of the business. The $10,000 could be put towards the startup costs associated with the carpet cleaning business, and profits would be dispersed based on the $10,000 investment. Silent partnerships work well if you work a full-time job and don't have the time and effort to start a business. Just make sure the proper legal agreements have been established. Pay down high-interest debt. Of course, before investing $10,000, all debts and liabilities should be assessed. What are the interest rates and terms associated with any bad debt payments? Bad debt is considered debt that isn't working for you, such as a car loan or credit card debt. Obviously, there are risks associated with all types of investments, whether it be a business, a piece of real estate, or stock purchase. When investing, there's never a guaranteed return. But paying down debt does provide a guaranteed return. In other words, if your credit card loan is at an interest rate of 20%, eliminating that debt will essentially provide a 20% return. Paying down debt also provides more stability and eliminates some uncertainty. If the economy goes south and your income is no longer reliable, you'll sleep better at night knowing your liabilities are limited. However, if you have loans with very low interest rates, such as a car loan at 1%, you might determine that it's not reasonable to pay that down when the money could be invested instead. So where will you park your $10,000 to get a great return on your investment? If you're fortunate enough to get a matching contribution from your employer, maybe a 401k is for you. If you're comfortable picking stocks, you could get a great return by investing in an individual stock. If real estate is your thing, try a rental property or a REIT. Whether a side business, becoming a silent partner, or whichever investment vehicle you choose, remember to first consider whether or not you should pay down any bad debt that will offset your $10,000 investment, then proceed with finding a profitable endeavor. As long as the $10,000 is invested constructively, it's likely that the money will compound many times over, resulting in much more wealth down the road. Remember to make intelligent, planned-out decisions, always weighing risk and reward.